Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw the market for the most part is balanced within a range. The 1888 to 1890 area is going to be used as the short-term bull bear zone, but it is really more of a reference area to establish our short-term bias. We have a key high volume node at 1890, and the way the market is setting up with the FOMC announcement today, there's potential for a directional move and a directional move away from the 1890 high volume node. On the upside, we have resistance at 96 to 98, followed by yesterday's high at 99.75, and then 1902 half to 1904 half marks the recent 3-day balance area high. So that zone has higher odds of responsive sellers being active on first test ahead of FOMC. On the downside, we have support 77.5 to 80, followed by yesterday's low at 74.50. We have a gap at 70.25, and for the most part, the market has been balancing in a wider range over the last 3 days, and the lower edge of that balance is 50 to 53. So the really significant support is at 50 to 53, but the support zones in between can still serve as pause points in the event of a breakdown below 77.5 to 80 and below yesterday's low. So the bias for today is going to be neutral with the idea that the market is setting up for a directional move. The early morning session is most likely going to be two-sided and balanced. Now that's something, of course, we will have to confirm in real time, but on most FOMC days, the morning session is a little bit less volatile, more likely to be range bound, and then once the FOMC announcement is out of the way, then we can get some better price action. But overall, on Fed days, you want to be more selective on the trades that you do take. Fade setups tend to work better on Fed days, simply because the market is kind of waiting on this decision, and no one is putting risk on at major resistance or really selling aggressively at decent support. So typically the market will remain range bound, and then once the announcement's out of the way, we'll get some directional movement. Now the expectation for this decision is for the rates to remain where they are. So the consensus is really that we're not going to get any change, but we can still get a reaction based on any changes in even the outlook heading into the next quarter. So in any case, the details of it are irrelevant. The main thing to keep in mind is just that we have this potential catalyst due later on today, and that can limit the range potential early in the session, and it can lead to some range expansion and volatility expansion after the announcement. And besides that, over the last 3 days, the market has been balancing. The day session ranges have been contracting, and the market is setting up for a bigger directional move outside of the recent balance. So use this 88 to 90 to determine which side is being dominant. The market holding above 88 to 90 tells us that the buy side is more dominant, and that means we can test 96.98, 99.75, and potentially even 02 half to 04 half, at which point the sell side can step in. On the downside, below 88 to 90, 77 half to 80 can get tested, and buyers can still be active there. 74 half, yesterday's low, is still spot where the buy side can be active. So ahead of FOMC, we'll look for more two-sided activity, and that means if the market's trading near initial resistance, then buying up there is going to be a risky proposition. So expecting continuation of the range-bound market from the overnight into RTH, but perhaps in a slightly bigger range. So those are really the main ideas heading into the open. Again, the main thing is to be very selective in the early morning session, and even after the Fed announcement, typically the first 10-15 minutes are not going to provide much edge, and after the short-term volatility is out of the way, that's typically when you'll get a better trade setup. And if you don't get a better trade setup, or if things are just moving too quickly and there's not a good spot to get on board, then it'll be better to just let it go rather than take trades based on just the fear of missing out and getting emotional and jumping in. Just realize that it's one day, right? So if there weren't any good opportunity available today, let's say, and you just didn't take any trades, that would still be okay. You want to make sure that you're sticking with your process, you are continuing to be selective, and if you're not getting good reward to risk and you're not getting a setup that really has edge, then don't jump in just for the sake of capturing something, right? That's not really good trading. So in that case, just wait. Be patient for the next good setup. As day traders, you know that the next setup is going to be right around the corner in 15, 20 minutes or an hour. It's not like you're going to have to wait days to get another good trade. So if you're not getting a good spot, it's important to just sit and not do anything as opposed to forcing things and pressing to make things happen. Off the open here, watch 88 to 890, see how the market reacts to it, and see if there's enough underlying momentum to the upside to support the market holding above 88 to 90. And if there isn't, if things are mixed and there's not enough strength to really push the market higher, then wait. Just wait for the next good setup and wait for the next positive expectancy trade. And just being in that mindset is going to help you avoid the mediocre setups that present themselves along the way. Because remember that, when you're putting on a trade, the risk is always the same, right? If you're using the position sizing that is explained in the risk management webinar, the risk is the same, irrespective of the trade setup you take. So whether you're going for 2R or 4R, the risk is always the same. So why use it on mediocre, low probability trades? Just save your ammo, save the capital for the high probability and high reward to risk setups. And that alone can have a huge impact on your trading and just on the mindset. So those are the main ideas heading into the open. Very balanced session. The market's balanced on a larger time frame as well. There's potential for a directional move either today, could be, heading into tomorrow, but over the next day or so, there's potential for a directional move away from the 1890 high volume node. So that's the bigger idea that we're working with. The buyers are a little bit more dominant short term. So let's see if that theme continues, and we'll take it from there.